Welcome back to Wealthy Mentor Trading, everyone. Today is January the 30th, 2022. Today I'm going to be looking at 5 stocks that you need to watch going into next week. I'm also going to be taking a look at the S&P 500 where we left off on Friday and what my targets are going into next week and the overall catalyst going in and the momentum and the overall outlook of the markets and the change that I've been watching and seeing last week specifically. I'm also going to be talking about the economic data that's going in next week and how it affects the markets. But before we get going, guys, please give this video a thumbs up, share it with your friends. And if you haven't subscribed to the channel already, please click that subscribe button as we do release videos every single week. As I mentioned at the beginning of this stream, I am going to be talking about 5 stocks that you need to be watching. One of them is Spot, Qualcomm, Facebook, Google, and AMD, which all are reporting earnings next week. So it's a jam-packed week full of earnings that definitely has the power to sway the markets in either direction. All right. With that being said, we do have the S&P 500 chart here. And as you guys can see here, pretty much the whole week we consolidated underneath that 4450 area, right? We did start off the week around that 4400 zone, dropping as low as 4235, hitting my targets to the downside, right? We did have this consolidation zone here, basically holding that 4300 line, and we did wick below that before buyers stepped in and kept this afloat above 4300. Now, overall, I did want to see that $4,500 area break to start that trend change and for a potential push to 4,500 and 4,550, which to me, it will start to shape up the market from neutral or bearish as it is right now to bullish, right? But right now, we still have that 4450 area as clear resistance going into next week. Now, we did have Jerome Powell, Fed, speak on inflation and whatnot and the interest rates. And unfortunately, nothing really happened from that, right? The markets were expecting and holding on to his comments, hoping that we would pop above that 4450 line. But unfortunately, they are not raising rates. And the market is a standstill. And what I see right now is a clear shift of momentum. You know, we had 2021 where we rose 30%, which was pretty crazy because we don't usually get that type of movement in the S&P 500. Usually you're looking at 12 to 15% on the year. So 30% was a big move last year. And so far, starting off January, the market has been spooked by the raising interest rates, and the direction right now is kind of muddy. And overall, it looks like we are going to be heading lower. I'm also going to be talking about those targets and where I could see those going. But one thing you guys need to know going into Monday, we do have that Institute of Supply Management releasing its numbers. That's on Monday, so that's significant. You know, all these areas right here that I'm going to talk about, they have the ability to sway the market down or up. So on Tuesday, we have the ISM releasing its manufacturing numbers. That's big, right? On Wednesday, we have the ADP releasing its national employment report for January. That's major. But the most important ones to me are Thursday and Friday, where the ISM is releasing its service purchasing index, right? That goes on Thursday, along with Friday, which is the biggest one. It's the Labor Department releasing its jobs report. And that holds the most amount of value and to determining where the market will head going into the week after. So that's on Friday. So keep that aware on your watch list as one of those key economical data that has the ability to sway the markets. Now, as I mentioned, I do want to see a break above 4450. The Fed meeting didn't really do much as these candles right here are a consolidation area and it's a bear flag, right? We have the flagpole here and here's the flag itself. And to me, everything looks like it's going to be pointing downwards. Now, to negate that, we got to see a break above this 4450 line. And honestly, 4,500 to 4,550 is where it starts to get interesting to the upside. Now, to the downside, I do have 3 targets going into next week. 4165 is a big one, right? This is one that I was looking at, and I was telling Wealthy Mentor Trading members that we could definitely see a push lower if we do break that 4235 area where it was a bounce last week, right? So key thing going into tomorrow, watch that 4,300 line. If we break below 4,300 and stay below that for most of the trading week, we're potentially going to head down and test this 4235. And if we can't hold that, 41.65 is an area that is interesting to me. So watch those three lines basically: 4,300, 42.35, and 41.65 if we do receive complete market weakness. Now, that could definitely happen, especially since we have big names reporting earnings. You know, we have Amazon, we have Google, Facebook, AMD, you know, you name it. The big guys are out there reporting earnings. And so far what we've seen is a correction on all the big names, right? So a bomb on these earnings could definitely push the market much lower and potentially hit that 41.65 area that I have drawn out here. Okay, guys, so that's my views on the S&P 500. I am neutral to bearish at the moment just because we are in that position that we can't break that 44.50 area. Okay, so going into the watch list, first name that I'm looking at is AMD, and AMD is important to me. You know, as I said, they report earnings on Tuesday. AMD has retraced about 35% from all-time highs and is currently holding that $100 psychological support area. You know, chip stocks have struggled lately with weak outlooks due to the, you know, shortage restraints. So to me, when I look at the AMD chart, I can see that, you know what, we've dropped down all the way to the psychological point, $100, and we did have a nice little bounce here on the daily chart last week. So for now, we are holding $100, and it coincides with this consolidation area here back on August 2021, all throughout October, and then we finally popped off above that 109 area. So going into next week, I am looking above that 107 to 109 area, right? And on an earnings beat, I can definitely see us pushing all the way to 117, 122. So these green lines right here are my targets going into next week. But first things first, I want to see a break above that 107, 109 area, along with healthy volume. And one thing about AMD is that it definitely has the power to switch the momentum in the semiconductor sector, right? That has been one of the leading sectors that has took a beating, and AMD is one of those key names that definitely has the strength to push it all up, right? I'm also going to be talking about Qualcomm, which is also another big name, but right now, AMD, the line in the sand is that $100 mark, and if we do break below $100, we do have that $95 as the second support zone, as it was the top right here, right? Previous resistance down here back on July 2021 now turns into key support at that $95 area, right? It's also a key area right here back on February 2021. So one area of support here, two areas of support right here, definitely makes this $100 psychological point really important, along with this $95 area as a second line in the sand for me. Now, if we do break that on an earnings bomb, we could definitely see ourselves at that $84 area, which was the bottom of this one right here. Okay, that was back on July. So overall, AMD, you know what? I am neutral, but that $100 line is very crucial to me. So I want to see a break above 109 on an earnings beat for a potential push to that 117, 122 target area that I have drawn out in green. Okay, like I said, it could be a strong catalyst for the semiconductor sector to move up as a whole. All right. Next name that I want to discuss is Google, G-O-O-G-L. And again, this is one of those names that we trade at Wealthy Mentor Trading. It's part of our swing trading watch lists on the large caps. All right. And as you guys can see here, you know, Google's reporting earnings on Tuesday, and it has retraced as much as 17% from its highs, but has showed strength when buyers stepped in at that 24.85 area right here. As you guys can see here, we bounced off that right now last week. And to me, that's key because, you know, we did break this trend that we've been in for quite a while, ever since August 2021. And we dropped down to the next support area, which was that July 2021 area where we did see a bounce and buyers did step in. Now, overall, analysts are predicting a big slowdown in earnings and revenue growth for Google in 2022. But for me, as a technical trader, as a technical analyst, I am looking above that 2706 area, right? If we get above that, I am looking for entry positions. And if we do get an earnings beat, I'm looking at that 2787 area all the way to 2855, right? Basically, I want this stock above 2706 for my entry. And to be back into this consolidation zone that we were in back on August, right? To me, since we broke trend, it is bearish. So we could potentially run up to 2706, then get a rejection and head right back down to 2616 and essentially right back down to test 2485, right? On an earnings bomb, if we cannot hold that 2485 area, I have drawn out these two red lines here as key support points, and that would be 2430 and 2395, as it is the peak of this right here back on April 2021 right now. So, one thing that clearly strikes out to me is that we did break trend. But another thing that's also important is that buyers did step in, right? This is a big push here, guys. 2485 closing in above 2667 is key. So first things first, watch above that 2706 for bullish positions, all right? And as I said, they are reporting on Tuesday. Another name that is important to me is Facebook. So FB, or as they like to call it, Meta, right? And, they are reporting earnings on Wednesday. Analyst Morgan Stanley has upgraded the Facebook stock to a $395 price target, which is pretty good. That happened last week. From a technical standpoint, Facebook is consolidating around that 289 to 296 area. As you guys can see here, we did have a nice bounce at that 289 area. Multiple candlesticks here on the daily, meaning it is holding that zone right here. So that is key support. And that coincides with this area right here, right? So previous price action in history right here suggests that's where it's going to stop. And that was basically March 2021, an area where we basically consolidated here, right? So to me, I want to, take away all this noise right here, and pretty much I don't even want to deal with Facebook unless it's popping above 315. And to me, if we get above 315, it shows that we are kind of bullish and we are heading higher into earnings. So above 315, I am looking on an earnings beat with targets of 327 and 335. Basically, it puts us back into this consolidation area that we were in. And before that, we were basically trending above this area for pretty much since October, right? We had a bounce off this 315 line here. We had a bounce right here, although we did wick lower, but it did respect that and go back above, right? And the more times you test the support area, the weaker that it gets, right? So we tested it here, we bounced here, and the next time we tested it, we broke right through. So to me, getting above 315 is a key thing for me, especially if you want to change the trend. And earnings is the perfect catalyst for that. It definitely moves the stock up to where it used to be, and it shows that overall Facebook is in a healthy state. So definitely watch above 315 on a beat or for your entries. Now, if we cannot perform well on earnings, obviously we do have that 289 area where we bounced off multiple times. If that breaks, 277 is a key interest for me and a support zone, as again, we did come down and test this area back on March 2021. So look out for 277 on an earnings bomb and above 315 on an earnings beat. Okay. Again, the tech sector is also one of those leading indicators and has significantly declined along with the semiconductor sector, right? And that leads me into the next name, right? QCOM, QKCOM. Qualcomm, as you guys can see here on the daily chart, it was one of those strong names that held pretty well during the market correction, but recently it did break trend, much like most of the stocks that I've been talking about. We've been into Qualcomm ever since November 2021, and it recently broke that $175, $170 area, which was pretty big. They are reporting earnings on Wednesday, and when you break trend, that 179, it kind of looked bearish, right? And we are consolidating around that November 2021 area, which is this zone right here, right? We did bounce from that 157 area, and one thing that's evident for me is that if we cannot hold 157, That is my first indicator because we did bounce here a few times. The next one is that 151 line, right? As it was a peak top right here, and it was a consolidation zone right here on February. So February 2021 and July 2021, we could not break it. We dropped down all the way to 122. And what happened is we created this gap at that 138 area. So as I was saying, if we cannot hold 157, that would be my first danger zone to break, right? My first thing that I would concentrate on. And the next one is that 151. We could potentially break 157 and bounce at 151, right? Based on these areas of previous resistance now turn to support. Now, if we cannot hold 151, and here's the kicker, we could definitely drop down to 138.5, which is a possibility, especially with earnings coming up, as I mentioned on Wednesday, along with the whole semiconductor sector pulling back. So one thing you need to concentrate on is AMD. Watch to see how they do on earnings, which could definitely set the tone for the rest of the market for the semiconductor sector. So Qualcomm could actually pull back just based on AMD's earnings. And when it comes down for their own earnings, they could definitely see some weakness and fill that gap at that 138 area. Overall, I do want to see a break above 170 on a bullish side, right? As I said, we did break this trend right here. So above 170 is an area for me, right? But for my entries, I do want to get above that 175 area, as over here, we held it once, 2 times, 3 times. And as I said previously, the more times you test the support zone, the weaker it gets. And we finally flush down, right? So my entries would be above 175. It would catch my attention if we get above 170. But 175 is that area for me. And on an earnings beat, look for that 184 area to be retested again. And again, to be stuck into this consolidation zone that we've been in previously. So Qualcomm, AMD, watch those two names going into earnings. And, as I said, Wednesday is the day for them. Okay. And one last name that is significant to me is Spotify. Now, Spotify is one of the names that we do trade at Wealthy Mentor Trading. It is one of our daily watch list names. So targets get updated every single day. And I am going to start this name on the weekly time frame. And I'm going to give you guys a quick second here to look at this and to see what you think is going on right here. Now, if you've been paying attention, you know that I've been looking at trends, right? Again, this is one of those names that was in this trend ever since June 2020. That's a big time, right? Been here, held this 220 line, maintained the trend. Again, held this 229, maintained the trend. Once more here, 3 times here, and finally, after 2 years, we finally broke trend and we broke that 220 line. And to me, that is significant, right? We have declined 45% ever since November 2021, which is the line right here, right? Ever since $300, that's 45%. And most important, like I said, we broke that 220 trend line that has held since June 2020. So all this has also caused Spotify to be oversold on the weekly time frame. That is pretty big, guys, because the larger the time frame that's oversold on, the more significant and power it has. And stocks like this that are big name blue chip stock don't spend much time being oversold, right? We do have some fundamental news from Spotify after Joe Rogan's podcast has, rubbed critics the wrong way. So there has been a chain reaction with some bearish selling and some fear going on and some boycotting. But you know what, guys? That stuff doesn't last very long. And as a trader, such as myself, as an investor, these are buying opportunities. You cannot miss out on big names such as Spotify that has had multiple earnings, killer earnings pushing it higher. So definitely watch Spotify. We are at this area right now. We did close Friday's session at 172. I am looking above 176, right, going into next week for a potential push all the way up to 195, where it was this quick, brief consolidation zone, right? So above 176, look for an earnings beat back to 195 and to 220 area, right? 220 is an area where we broke down from, so look for a test at 220. Now, if we cannot break 220, right, we could definitely test it and push right back down to that 165 area. Now, 165 to 153.5, as you guys can see here, there's a lot of price action here, guys. So I don't think it's going to go below 153.5 just based on the technicals and what I see in the clear support. But if we do get a bomb on earnings, we could potentially drop down to 130, which was an area of consolidation here back on March 2020. So that's a long time, guys. So for me, definitely look above 176 for potential targets of 195 and 220, just so that we can get back into this trend that we've been in here ever since 2020, right? So right now I am in a wait and see approach on Spotify. Personally, it is one of those swing trading names that I'm going to be entering, right? But I do want to see that 220 break. So reporting earnings on Wednesday, another big name. So guys, those are 5 stocks you need to watch going into next week. But first things first, make sure we get over above that 4450 and $4,500 on the S&P 500, right? Keep in mind for those job numbers, manufacturing numbers, all those economical data that definitely sways the market and pushes the direction from bearish to bullish, right? So watch out for the market in general. Look out for the smaller sectors such as QQQ representing tech, semiconductor, SMH, right? Those are 2 names that you should be also watching along with the S&P 500 because much of these earnings are based off those 2 sectors. All right, guys, thank you so much for joining. If you are interested in trading with us at Wealthy Mentor Trading, we do have a $99 promo. The link is in the description for that. So click that and join us to trade on Discord at Wealthy Mentor Trading. Thank you so much and have a great week, guys. Bye-bye.